But it's not about me. This is all about us collectively uh, showing and providing actual training to someone can take. And if you're interested in real estate and becoming a real estate investor or just real estate in general, we want to show the purpose of the class, the master sessions, to show one technique that you can use now to apply today, master tomorrow, and then on the weekend possibly make some money out. So that's the goal of the class. Remember, we observed the three rules. There's going to be no selling, no soliciting, and no spamming. 100% no selling, no soliciting, no spamming. So if you want, we're going to cover one topic, but if you want more information, then it's upon you to contact the contributors, the subject matter experts. And so we have three subject matter experts in the room. We brought back Gilbert and Bradford to talk about capital, and then Rodney is going to talk about deal flow. So Gilbert, if you can introduce yourself. Gilbert, you're coming in low on my end, volume. Gilbert, go ahead. Maybe it's just me.
I introduced myself. We want to. Bradford, did y'all hear me good?
Yes,
Yep.
sir.
All right.
Bradford, go ahead.
I don't think Gilbert was done. Were you done, Gilbert?
Yeah, I'm done. I'm done.
Okay, no problem. I didn't know. I just didn't want to over talk over you. My name is Bradford, and I run a lot of different business. I work in communications. I do a lot with Roku, Amazon Fire, and Apple TV. And I also run Amazon stores. We run over almost 100 Amazon stores where we are more like a distributor. So I kind of work in that area. And being that I am one of the contributors today, what I'm bringing to the table is speaking about credit. When you're doing business, a lot of the times when people of color do business, we always use cash and not realizing that credit works a lot better, gives you a lot more flexibility. So today I'll be talking more about trade lines, which is probably to me the best way to be able to increase your credit so that you can go into a bank and make purchases that you need for projects that if you just had a little bit of flexibility with your credit and the ability to take out trade lines or get trade lines so that you can get credit, so you can get access to capital. That's kind of what I really work in as far as in that area. So that's what
All
I'll
right.
be doing today.
All right, thank you, Bradford. Rodney?
Hi,
Rodney,
I'm
you here?
Rodney. Yeah, can you guys hear me?
Yes, sir.
Okay. All right. I'm Rodney Washington, a local realtor in the area. I've been in real estate altogether 5 years. Started out wholesaling, finding deals. Then I moved on to being a realtor to help other people find deals. I have a lot of experience with real estate, so I'm here to help.
Okay, full disclosure, Rodney actually works for one of my companies. He's a realtor at Carmena and Associates Realty Group. And so I want to start off with deal flow. I'm sorry, with credit. So the last master session, we spoke exclusively on credit, and we talked about traditional, we talked about trade lines. We've been asked to revisit that. So Gilbert, if you in a couple of minutes, if you could talk about traditional lending. You did a great job about the necessary. Uh, Ronica, go ahead. Gilbert, the necessary qualifications for traditional bank lending, and then Bradford. Once Gilbert is done, if you can talk about the trade lines, Gilbert.
Yep. So just to recap last time, what I talked about was, when you're looking to buy long term, you got different strategies, right? So if you're looking to buy rental property, there's opportunities available for you depending on the level of documentation you're prepared to provide, right? So Fannie Mae, Freddie Mac, they both have investment property loan options. Probably starting interest rates, and don't hold me to it, but if you put 25% down on this property, maybe starting at about 4.8. So really good for cash flow on a 30-year fixed rate loan, and making cash flow a priority versus necessarily maybe paying that off. If you can document income, right? If you can document that I got money, my money's not coming, being borrowed, etc. You got to provide full documentation, just like you're buying a house to live in with those type of loans. But there's also other loans that aren't really that far off from there, like debt service coverage loans, where pre-COVID-19, pre-coronavirus, rates were probably about 5%, 5.25%, and you would get into a house and the lender would use something like the debt service coverage ratio, which is a ratio of the monthly payment, principal, interest, taxes, insurance, and association dues, so PI and TIA, compared to the projected monthly rent, or if it's rented, the least monthly rent, right? So if lenders on those would lend, let's say the payment's $1,000 a month for the house. When you factor in everything, the lender will lend you money as long as the rent collected is $1,000 a month. And sometimes those rates are going to be based on things like loan to value. So how much did you put down when you bought it, or debt service coverage. So maybe if it's rented for $1,000 or $1,250 versus $1,000 and the payment's only $1,000, you get a better rent if the projected ratio is a better ratio for the lender, a safer ratio for the lender, a better rate, I should say. That's one other option. And I mean, of course, you can get hard money options as well, or institutional funds that aren't necessarily hard money. But there's a number of lenders who won't really verify where your money comes from in terms of your closing costs, down payment. They don't really give a damn where the money comes from. They just want a certain equity percentage in the property. And at that point, you might be paying more in points. You might be paying or taking a higher interest rate. But you may get something like an interest-only payment, which could reduce your actual payment, even though the interest rate's higher. The interest-only is not going to help you build any equity in the property, but it may help your cash flow. Or you can't document, so you might take out that interest-only. So those are some of the options available in terms of buy and hold. And when it comes to fix and flip financing, right? So if you're looking to turn homes, you're generally looking at hard money or close to hard money opportunities where your rate and your cost, your upfront costs, are largely going to be due on your level of experience. So a person who's done 10 deals in the last 2 years, or has 5 or 10 rental properties that they own and manage, and has done a few flips, is going to get a better rate than a person who says, I'm just getting started, right? So and how do you document that? Usually you document that with deed transfers or with taxes that show, hey, I've done these properties, et cetera. But generally they're looking for deed transfers from either you, in your name, or in companies you own, or name of companies you own. And those probably are going to start rates around, the lowest rates are going to be around 8% for that short-term financing, and they might go up to 12 or 13%. And you're probably going to pay a minimum of 3 points and more likely five points to get that money. But
so Gilbert
also come with the potential for lower down payment. So they'll base a down payment maybe upon the after repair value versus necessarily your purchase price. So maybe you put up 15% of the purchase price, and that lender will fund 100% of the rehab. And then once those properties, if you want to convert a property in need of major rehab or renovation to be rent ready, maybe you buy with that, and then you convert that financing to long-term financing. All right. So those are some options in terms of different financing. And the last thing I'll mention is it's always cheaper. The price is always better if you can pay cash versus getting financing, right? And in general, if you can use a line of credit, maybe you can get a property or set up lines of credit with various lending institutions, banks, and sometimes commercial lenders. That might be your cheapest option overall for acquiring property, because you can use that line of credit to acquire at a lower cost and then possibly refinance to pay that line of credit off after, if you want long-term financing. Right. So I'm done. Bradford, you want to take over?
No, Gilbert, I have a quick question for you. So you mentioned about points. Most of the room may not be, in the industry yet. They're just starting. So what is a point? And could you explain that? And then you mentioned about the equity that someone may be bringing to a particular deal. What is the average percentage that they're going to, what could they expect to get with respect to how much equity in their home? If they have an equity of $100,000 in their home, are they going to get a $100,000 loan or what?
Yep. So a couple things. Points. 1 point is 1% of a loan amount. So it's just a lender term for percent. So if you pay 5 points on a $100,000 loan, you paid 5% or $5,000 to the lender to acquire the rest of the money that they're going to give you. If the loan is $100,000, it's 5%, or 5 points is $5,000, right? To answer your second question, equity. Well, it depends on the type of transaction you're doing. If you're borrowing money, say in a home equity line of credit from your primary residence, then your equity, the equity amount of equity you can pull out of your primary residence might be up to 80 or 90%. If you're looking to borrow money on an investment property and looking to pull equity out of an investment property after you own it, you're probably going to be capped at 75%. So if it's less, just use that $100,000 estimate. If you own a home and it's $100,000 value of your home, depending on the bank, the lender, you can usually get up to 89.9% of that equity out as cash out to go do something else with on your primary residence. But on an investment property, you're probably going to be capped at $75,000 of the equity on a $100,000 value home, right? So 75% of the equity. Now, if you're looking to purchase, that purchase equity could be different. You know, Fannie Mae, Freddie Mac program allows you to get into a long-term rental for as little as 15% down, but there's not a lot of lenders that are actually going to lend at that 15% down because getting mortgage insurance is difficult. But 20-25% are what's looked for. I mean, I got a guy buying a condo right now for with 20% down, and he's documented that he has another, I think it was 6 months in reserves to get the loan approved at 20% down. You get to 25% down, the requirements and reserves are lower. Depending on the type of loan, if it's not a Fannie or Freddie, that's going to vary by lender. Every lender, every hard money guy, every institution that's going to give you money is going to set their own percentage and their own risk tolerance.
Anyone have questions? All right. Anyone have any questions for Gilbert? We're going to, if not, we're going to go ahead and move on to Bradford, who's going to discuss trade lines. Any questions from Gilbert? You can unmute yourself. All right, Bradford, go ahead. Trade lines.
Okay, can everybody hear me? Okay, perfect.
Yeah, we can hear you good.
Okay, cool. Pretty much to kind of go hand in hand with what Gilbert is saying is before you get to that process of what he's explaining, that's where more of the credit comes in at, which is where you would need trade lines. A lot of the times, you know, like for all the interest rates that Gilbert was discussing, those interest rates are all going to be determined on what type of credit you got. Now, of course, if you are doing like hard money lending, they're not really looking at your credit. But of course, you do know that, you know, there's higher points or interest rates that you're going to pay on that type of money that you're looking to borrow. Also looking at the longevity of it, if it's a short term or a quick flip or something like that. But with the government's rates right now being where they're at, which prime is at its lowest right now because of the coronavirus and all, you're able to get pretty good interest rates when you're looking to do any kind of lending at this point. So of course, that's where a good credit score would definitely come into place. So like, for example, let's say you do have like a 650 or maybe even a low 7 score. Some people think, okay, well, I'll just go make a couple payments on my credit card and then that'll report and that'll push the score up. It doesn't always work that way because sometimes the lender is looking at how much credit do you currently have. So let's say you only got two $10,000 credit cards. That's $20,000 worth of credit, but you're trying to take out a $50,000 loan or $80,000 loan. Well, your credit ratio doesn't match with what you're trying to borrow. And so, of course, you want to add some more credit, which is those trade lines, to your credit report. Normally, it takes about 30 to 45 days, depending on when you actually purchase the credit line or that trade line. And then once those trade lines are added, and all it is just we're adding you as an authorized user to a credit card that has a very high balance, meaning or limit. So, for example, we have a credit card that we could add you to, might have a $40,000, $50,000 limit, even up to a $100,000 limit on it. But once we add you to that card, you don't just get the limit added to your credit report, you also get the history. So, for example, a card that has a history of good payments since 2001 and now it's 2020, that's 19 years of good payment history. We have cards like that with a minimum of 5 slots where you can add up to 5 authorized users. And by doing that within 30 to 45 days across the board, when I say across the board, that means Equifax and Experian and the other credit company, all 3 of those will get you. And those particular trade lines will show up on your credit report. And at that point, all of its history also becomes yours too. So now when they go to pull your credit report, not do you just have a high score, but you can now show that you have good payment history. No, it's not yours. You didn't, actually make those payments for those years. But again, it is legal for you to add authorized users to your credit cards and share your credit history as far as on a American Express or a Discover card or whatever card that you have. So that's pretty much how it works. I always tell people, because a lot of people want to get trade lines and they still have bad things, negative things on their credit report, which I can tell you now is the worst thing. The worst thing you can do is add trade lines to your credit report if you have negative stuff on your credit. And the reason being is because, yes, the score is going to go up, but it's going to come right back down because the negative credit, with whoever you owe to that negative credit, those people are going to eventually report that negative information to the bureaus, which of course is going to pull your score back down. So you're going to be kind of like going back and forth. And you really don't want to do that when you're using trade lines, because you could be about to do a deal tomorrow and the score drops back down and you're sitting there saying, oh my gosh, I thought I had a 720 or a 760 or 750, and now the negative just reported and it pulled your score back down. So that's pretty much what I have to talk about. If you guys have any questions, please, I'm all ears.
All right, so trade lines. Can you have multiple trade lines, Bradford? Like you can have maybe 30,000 trade line on one card, 50,000 on another card, 20,000 on another card, or is it better just to have one?
Well, again, and I just had a client who just bought 3 trade lines off me. She's looking to buy a $250,000 house. Now, of course, this is not flip property. This is for her and her family. And we looked at her Credit Karma, and she has a $15,000 credit card, and she has a $7,000 credit card. Now, of course, if you're trying to borrow $200,000 and you only got $17,000 or $15,000 in credit right now in your credit report, that doesn't match with the type of credit that you're trying to borrow, even though it's a house. So a lot of the times the lenders will look at that and they'll say, well, you really don't have enough credit to borrow that much. I mean, think about it. If you're a bank, are you going to give a $200,000 house to somebody who only can show that they've only been able to sustain credit worthiness of up to maybe 17,000? No. So what we did is we added a 40,000. Actually, hold on. Let me see. I actually have the sheet. Let me see. Hold on one second. I'll tell you what we got for her. Okay, so what we did is, this is paperwork right here. We put her on a Chase credit card with 18,000 limit, and it's from 2013. and we charged her $700 for that. And we charged her $700 for a Bank of America. It's from 2010, and it has 22,500 in credit. And then we also gave her a Chase. Oh, no, not a Chase. I'm sorry. American Express with 40,000 limit from 2011. And with all that, she was easily able to walk in. In fact, they were kind of impressed because they were like, well, how did you get, well, they never, first and foremost, they never had ran her credit yet, which was good. And I told her, please don't have them run your credit. And then, of course, once they did run her credit, she had almost $100,000 worth of credit showing all paid off, all good history. They told her they would give her up to $400,000 of credit because the history and all this new credit that she had on her credit report. So you can add as much credit trade lines as you want. Right now, myself, I have about 16 credit cards. And all my trade lines or credit cards are at least a minimum of 15,000 or above. I think my lowest credit card actually is from Discover, and it's for 13,000. And I do sell those, my own personal trade lines, not just the trade lines that we sell through our company. Anybody can do it.
So trade lines is one way that not only you can show credit worthiness, but you can build up your credit score.
Oh yeah, it's going to push your score up for sure. That no question asked.
And what is the turnaround time of that? It's fairly quick, right?
It's
one or two reporting cycles.
Yeah, it just normally it doesn't take two. I know that sometimes normally from what I've seen for the amount of years that I've been using trade lines, it's like, for example, you'll add a credit card and it's the reporting date. So the same date that it normally would report. And when it reports, it does go through across the board, but sometimes Experian might be a little delayed. I mean, with the coronavirus right now, I don't know how many people are actually there or how they're regulating and adding or reporting, people's credit at this moment, because they're actually doing this. Right now, they're doing this thing called credit forgiveness with a lot of credit card companies, where if you missed a payment from January to now, if you missed any of those payments, they're actually not going to report it. I just read something on Squawk, and they were talking about that today, that a lot of people who weren't able to pay their credit cards, it's not going to show up on their credit report. But again, when you do, add one of these trade lines, there is a possibility that for that first reporting, it might miss it because they just didn't add it yet. So normally it'll definitely hit two for sure. But there may be one in there that, they just didn't do it. And then that following month, you do see it pop up on there. So it could take up to 2 months, but normally you're definitely going to see it across the board within one or 2 months.
All right. So do we have any questions with Bradford about trade lines or how or the combination? I think of it kind of this way, is that if you have a low credit score, you want to build that credit score up. Let's say like you're not interested in investing, but you want to have a personal home. You're building that. You need to build up your personal credit. And so trade lines are one way of quickly doing that. Of course, you want to clean up. You want to clean up any derogatory marks on your credit report. But trade lines are one way to do it. And so once you get your credit score up, and Gilbert, what is the minimum credit score that you need to purchase a home that will give you decent rates? What is the absolute lowest one? And then what's your target for a entry-level home, someone who's interested in purchasing an entry-level home? Gilbert.
I got on mute.
Yep.
Yeah, I was trying the spacebar thing, but it keeps typing in the chat when I do that. Anyway, I would say for FHA, for government-backed lending, FHA loan, you definitely want to be at a 620. You're not going to get the best rate, but you get a reasonable rate, right? On the government loan, you want to get the best rate. You need to be at a 660, 680. There's no real price adjustments after that. for government insured loans. And government insured loans are USDA loans, VA loans, FHA loans. For conventional lending, the best rates are at a 740 credit score. And that, by best rate, I mean sometimes you can get the same rate, it just costs you more to get the same rate when your credit score is lower, right? Conventional lending, if you're not putting 20% down on property, meaning primary residence is a case, you actually get a lower cost of monthly mortgage insurance for every 20 points you have on your score, up to 800. So you can get a very low cost of mortgage insurance if you have a 760 or 780 credit score. But the difference in interest rate, there's no difference in interest rate over a 740 credit score. Now, that's for conforming, what we call conforming lending. That's for loan amounts under 510, 400. Jumbo loans are quite often bank products or separate investment products or investor products. They're not always going to Fannie and Freddie. They don't follow the same, what we call loan level price adjustments. So a loan level price adjustment says interest rate A pays a premium to the borrower of say 2%, right? That 2% needs to cover lender underwriting fees, broker commissions, etc. But a loan level price adjustment might be, well, if the person has a 740 credit score, we're going to add $350 to their 2%. And so it reduces your cost as a client by $350. If your credit score is below this, maybe we subtract from that. So that's maybe we subtract from that base price, et cetera, paid. So minimum 620 on government lending, preferable 660 or 680 on government insured lending. Minimum 620 on conventional lending, but it's really hard to get approved at a 620 credit score on conventional loans. You generally want to be at a 680 on a conventional loan for it to be reasonably priced. And you prefer to be at a 740 on a conventional loan.
All right. So we have our money together, either through traditional or non-traditional means. And so now we're ready to purchase our first investment property. Before we move to deal flow, are there any questions about credit? Any questions about credit?
I have a question for Bradford, actually. When it comes to
maybe you can do it offline, Gilbert, for time. Any questions about credit? All right, so we have our money together. Rodney is a realtor. He's actually gonna talk about deal flow. Now, there's many ways that we can cover deal flow. You know, deal flow. There's a bunch of techniques. What I want to discuss this particular session is driving for dollars. That is when you're actually driving in the community and you're looking for distressed properties. You're looking for properties that you may know or may have heard someone from your family, friends may have said, hey, this person is having a problem with their property. Maybe they're behind on taxes. Maybe you've looked at and see that, you know, the yard is unkept. There's no the repairs to the house or you're not being upkept, and this person is in your community. So you may know this person. You may just know this person through friends, or you're just driving this particular community and you're thinking of this community as a great opportunity to find the property and actually flip the property. That's called driving for dollars. So Rodney, could you talk a little bit more about that, please? Rodney, you there?
Hello, can you guys hear me? I'm having trouble hearing you guys when I stepped out the car.
We can hear you, Rodney, but your signal
the wind is breaking your signal.
Yeah, your signal is poor. Can you?
Okay, let me try to move around. Is that better?
You're bouncing around big time. Rodney?
Hello?
Yeah. Check your signal strength. Are you in an area that's kind of a strong signal?
Hello?
Okay, so we look like we're having a little technical difficulty with Rodney. Hold on a second. Rodney, can you take off your virtual screen?
Oh, it's better?
A little bit better, yeah. Go ahead.
All right, hold on. Let me take this off.
You're clearer now, Rodney. All right, so while we're waiting on Rodney, Gilbert, you can. Did you have a question for Bradford?
I did, and I'll key it into the group too as well. So for Bradford, I was wondering, you know, we talked about trade lines and personal. Can he add trade lines, business trade lines? So if we're looking to invest in an LLC, if we're looking to invest in a company name or with company name, can we get a business trade line or business trade lines added? I'll give you an example of why I asked the question. Synovus Bank is happy to lend to real estate investors that don't tell them they're investing in real estate, but have a business that has existed for, say, 2 years and has at least 2 trade lines that have existed for 2 years. So they'll do limited documentation or no doc lending. So will Center State Bank. And so there's some opportunities there to open up some business trade lines where you have access to low interest financing options when you do it. So, but can we get that trade line, that business trade line history? Because I know a number of people who might have registered a business a couple years ago and they never really figured out how to open up credit in that business name. And so they've got a business, say 4 years old, 3 years old, but they've been working on their personal credit. And last time we had talked about, you know, moving things from personal credit to business credit and hopefully adding trade lines there.
Okay, so actually I can answer that. Yeah, you can add business trade lines. And so he actually have limited business trade lines, but he has some business trade lines at his disposal. So Bradford, Gilbert, I just wanted to make sure that we talk about that a little bit more about that Synovus Bank lead. So we have some people in the room that are not traditional businesses. Not real estate in the real estate business, but they can get equity. They can get funding for their business through Synovus banks and other banks by adding other business trade lines. Is that what you're saying?
Yeah, I mean, if you have a business that you've had registered in existence for more than 2 years, you can get your business, even if it's out of state, like if you're in a different state, Florida, Georgia, et cetera, you can get new business trade lines with local banks. I mean, regional banks and local banks are most likely to be willing to lend to you. You're not going to walk into Chase and have them give you unsecured money. But the local bank probably will, you know, 50, 75,000 in unsecured funds. We call them PLOCs, or BLOCs really, the business lines of credit that are essentially signature-based loans that you get because you have a good credit history and a history of having some active business trade lines, right? So they'll do those without reviewing your business tax returns. And that allows you.
I'm sorry, say that again. Say that again. That's a key point.
Without reviewing, say, your business tax returns, they'll have you fill out an application, fill out a personal financial statement. They'll take a look at those things and then say, okay, well, it looks like we can probably do our no doc loan at $49,500 or $75,000. You know, so those are important mechanisms for financing, in particular, real estate investments and being able to pay cash at lower interest rates than you get through a traditional hard money.
But that also could be used if you have a book deal, or if you have a product launch that's not real estate, or if you're investing in some other type of business. I just want to cover that again because that's pretty important. They're not looking at your business don't have to make money. It just have to be in existence at certain price points. Your business don't have to make money. Just have to be in business for over 2 years, and you have to have decent personal credit. Is that what you're saying to qualify for this?
Yeah, decent personal credit. Plus, you're going to have some of them require some existing business trade lines with trade history.
Right. So if you have let's say two existing business trade lines, let's say that the existing business trade line is purchased from a broker like Bradford, you have decent personal credit, and you have a business that's been in existence for a couple of years, you're golden. It's basically what you're saying. You're muted, Gilbert.
There are banks that will give you money just based on you look like a nice person, and you have these requirements.
Okay. All right. So that's kind of important because the number one thing that I hear from the people is that they don't have access to money. Or they have this great deal or this great idea, but don't have access to money. These two brothers are just saying that as one, as long as you're in business, been in business for 2 years, whether you posted a profit or a loss or not, they could find a way to fund that. So, Rodney, are you back on? Any questions before I move over to Rodney? We talk about deal flow. All right, Rodney, are you back? You ready?
Hopefully, can you guys hear me?
Yes, sir.
Yeah,
All
we can
right.
hear you.
Yeah, see, when you're live in the trenches, that's what happens.
So just a little bit louder, Rodney.
Okay. Can you hear me now? Better?
You fine. David, turn your volume up, man.
My volume is maxed.
Oh, okay. Then you got some low tweeters over there because I can hear him perfect. If he talk any louder, he'll be screaming.
Okay, I do apologize, mate. It's definitely on my end. Go ahead, Rodney.
Okay. And I'm driving for dollars, so I'm out here live. I found the place. It has high grass. It's abandoned, which is, and if you care about the community, you don't want this in the neighborhood because it drives down. There's no taxes coming from this property, which goes to the school. So that's important for the community. So with this particular property, I did my research, and it's a 3-bedroom, 2-bath, and this is an up and coming area in East Tampa, which is on fire right now. The houses fixed up, stay on the market for like 59 days. So it moves pretty fast. It was in the last 12 months, the home value has been up 8%, so which is awesome. So with this particular home, it ranges from 142,000 to 162,000 fixed up. And as you can see, if you can see that, it needs some work. So let's just say you buy this home for $50,000, and put another $50,000 into it, fixing up. That's $100,000 that you invested in this property. And with it being fixed up, it could go for $162,000. So at the top, you have made $62,000 on this particular property. And who wouldn't like to have $62,000?
So we're looking at a estimated after repair value of 160, and you put in 100, you got a 60 out, and so you're borrowing that amount, the 100,000 to purchase the property from either traditional or untraditional means. We talked about that a lot, and then you sell this property. Give us an idea, Rodney, of the turnaround time. Are we talking about how many in months from purchase to potential turnaround are we looking at?
So between purchase and getting the correct contractor to fix this up, so that's maybe 2 months worth of work that is done. And like I said, once it's fixed up in this neighborhood, this market is really exploding. So it's they sell fast. So the average that it stays on the market is 59 days. Now that's the average. Now it can sell within the week, which for the right price, it will go that fast. So complete turnaround with everything, maybe at the max 4 months, 4 to 5 months.
Okay, so with a little hustle, in
Exactly.
4 to 5 months, you've made $60,000 plus or minus, is what you're saying.
Exactly.
So for to turn around, let's say you turn around 2 in a year, you made 120 best case, 100,000 average case. Is that fair?
Yes, yes, that's very fair. And
So we're talking about with the little Gilbert, go ahead.
Yeah, on when we're talking about deal flow, are we factoring in, and not to discourage anyone because it's a cost of doing business that you should factor in, but are we factoring in the cost of the sale of property? So you see a lot of times on the flip shows, oh, they sold that, they bought a house for this, they sold a house for that, and I'm thinking to myself, in Florida, it costs about 7%, a little bit over 7% of the sale price to sell your home. You want to offer competitive commissions so that realtors want to show your home, first of all, right? And then there's some taxes and title insurance and et cetera being included there. So is that factored into these numbers?
So you're looking at, again, we're doing ballpark here. So you're looking at $7,000 less than 100. So you're looking at $92,000 profit instead of 100,000. That's still a good day. So basically what we wanted to talk about in this class is that one technique that someone with hustle and innovation can actually use. They can get the money in trade lines. If they have no credit, no money, you can build up your trade line. You can build up your credit with trade lines. Once you get the credit up, then there's opportunities for traditional lending because your credit score is better. But also, Gilbert mentioned that you can also use hard money and other money that we may talk about at another time because I want to be sensitive to other people's time. But you can use hard money to fund the deal where they will the hard money companies will put in a significant amount of money toward that deal based on the deal itself. So you write up the deal, basically, you send the deal over to various companies, and traditional hard money companies, or a hard money could be a family member that says, hey, listen, I will give you X amount of money if you give me a return on that money. So there's companies that can provide money for your deals, but then also there's family members that may say, hey, listen, I have 50,000 or 30,000 sitting in the bank that is getting less than 1% interest on it. If you give me 12%, guarantee me 12% on my money, I'll let you lend my money. I'll lend my money to you for 6 months to fund this deal. You get 2 or 3 of those guys, and now you have enough money to fund the deal. Okay, Gilbert, go ahead.
All right, so along those lines, David, I'm gonna tell you how I formed my first real estate investment company. I got with 3 friends I went to high school with, and each of us approached friends and family members and said, hey, each of us put a little bit of money in ourselves. So I think we each put about $5,000 to $10,000 in ourselves. We approached friends and family members and said, hey, we're forming this company to invest in real estate. We don't need your money just yet, but we're going to identify a really good deal with a good return. And if you will lend us X, we will give you percentage ownership of an LLC we create to buy this property, and you will get a return based on what we make. All right. So we actually, on the initial investment, paid everybody 20% return on their funds, and we made a profit. We took what we call the management fee off the top of that. So we had capital from friends. We weren't official. People were giving us increments of $5,000, some of them $2,500. We had 10 or 15 of them. We kept them up to date on the project. We sold the house. We paid a management fee of 20% of the sale price or whatever. We paid the realtors who were associated with the deal, and we paid everybody back and said to them, hey, would you like to reinvest your money? 20% was our initial, but we're backing that down to 15, and it's going to be 10. But as you can see, we know what we're doing. We've proven we're showing you some success here in investing your money. And your 10% is flat. So if it takes us 6 months to sell it, you get 10%, and you make 20% a year if we can sell 2 of them. If it takes us 12 months, well, you get 10%, you're doing well. If it takes us more than 18, we're going to refinance the property, pay you your principal, and then when we do get to sell it in the future, we'll pay you that interest. So that's how we set it up and allowed us to work where we didn't necessarily have to worry about anybody's credit score, and we didn't have to worry about approaching banks for capital. That is just another option or opportunity when you're looking at, you have real property being held by people and they have an interest. So basically they had a non-management interest in an LLC we formed, and that interest paid them dividends when we sold the property.
Right, right, and actually a lot of people do that, is the family and friend approach. And so I recommend that if you have friends that are really willing to invest in you, or feel that you're comfortable with giving you some money, get a 3, 4, 5 of those guys together. Now you have some money to do a deal. So you actually creating your money. You started with zero money with just an idea, and we've given you 3 different ways that you can fund that idea, just in this particular call. So wrapping things up, do we have anybody have any questions about trade lines, about deal flow, traditional lending or non-traditional lending? Funding. Any questions?
Hey, I just wanted to say, Gilbert and Rodney, I sent you guys a message. Did you guys get it?
Yes, I got it.
Okay. Gilbert, did you get my message also? All right, thanks a lot. All right, now I definitely learned some new things today, and hopefully I can partner up with you guys, because it sounds like you guys are definitely making some moves and some things that I would definitely like to do. And Rodney, you out there in the Amazon, but I like your grind. I definitely like your grind.
Yeah, he's in the deep woods there. He's in the deep woods. All right. So do we have any questions from the room? Any questions?
Nah.
I'm hoping that we answered how you can get funding for, even if you're not in real estate, how you can get funding for your deals. Any questions? All right. Thank you, guys. Thank you, everyone.
Hey, thanks a lot. Appreciate you guys having me. Appreciate you, David.
Thank you. Thank you, Bradford. All right, Rodney.
All right, thank you guys.
All right, thank you. All right, thank you, guys. Thank you.
For you to show me, hush your lips, stop your